Hello and welcome to a Purple Chips Action Alert for August 17, 2012. This is for St. Jude Medical, symbol STJ. I'm John Schwinghammer, the author of Purple Chips, published by John Wiley & Sons and available everywhere. Before I start, I will start with our video disclaimer here. The information contained in this presentation is not intended to be a solicitation to buy or sell securities and is not investment advice. This presentation is based on the criteria of the Purple Chips model and has not been approved by the author's employer. The information contained herein is believed to be accurate but cannot be guaranteed. Stocks can be risky and you should consult a professional before investing in the stock market. So let's get on to St. Jude Medical. First I'll start by showing you the key points. First of all, St. Jude Medical is very similar to Stryker, SYK, which we had bought. We signaled a low valuation just a few weeks ago at 51. The stock is currently trading around 54. They're in similar businesses, and so if you don't already own Stryker, then St. Jude Medical is a very interesting possibility. St. Jude pays a 2.5% dividend, has a PE of 11 times. The return on capital is at 27%, the earnings yield 7%. Those are very good figures. By the way, in case you're not already aware, earnings yield is essentially the amount of earnings produced based on the enterprise value. Enterprise value is the market cap of the company, so the value of the company, the stock market value of the company, plus any debt or minus any cash that they have. So it's how much money they need to run their business and then how much earnings they produce from that amount that they run their business with. So that's how you calculate earnings yield. Purple Chips, we have a high valuation target of about 51 on St. Jude, and S&P has a rating of 4 stars and a 12-month target of $45. Now let's look at the chart. Over here you've got the 20-year chart of St. Jude Medical, and you can see that based on the current price of $36.91, and that's as I speak here, this is a live chart, you can see how the earnings line is actually very low. So what I'm looking for is that at this point, this is a good valuation, and I would expect St. Jude again, if I just, I'll draw essentially the shape of the earnings line there. Whoops, not sure what happened. Okay, there you go. So the target should be around $51. So the earnings line could be shifted up there. Like if St. Jude traded up to 51, you'd see the earnings line shift up that way. And that's very, very conceivable, and within the next 18 months, I think that's not unreasonable to expect. So this is a good quality company, as can be seen by the progression of the earnings per share curve. And you can also see that this is a very attractive valuation, very similar to what we saw back here, and of course just slightly lower than what was back here. So that wraps up for today, and I'm John Schwinghammer, the author of Purple Chips, and thank you for watching.